to the show here and get your thoughts on this company because, Andy, I know it's a lot tougher to kind of look at these names and make a call against them when they're at all-time highs. But at the same time, it can be just as hard to kind of pull the trigger on the buy side when you're looking at a stock that's basically trading at the most expensive value it's ever made.
Yeah, life would be a lot easier with these stocks at all-time highs. Life would be a lot easier if we had a lot of negative things to say about them. But a lot of the time, it looks like, and PayPal's no exception, that these companies are at all-time highs and are at and looking very bullish for a really good reason, and that is because they're executing really well. When we look at PayPal, I know this will drive Kevin crazy a little bit, but a lot of the reason for the growth of PayPal is their opening up of cryptocurrency buying and selling inside of their application. You can see that in LikeFolio data. It's up, threefold over where it was prior. Really big increase that's really holding. And what that tells me, more so than the cryptocurrency craze, I think this tells me that PayPal has been effective at getting itself in front of people where they're trying to make transactions in order to acquire the customer. And then from there, it's up to PayPal to hold on to that customer, to make that customer, more like what Jenny was talking about, the kind of ideal PayPal customer that will use that account to pay for their dinners, to transact with friends and things like that. So overall, we see PayPal doing a really nice job. Overall mentions up a little bit. One thing that really stuck out to me as we prepared for this segment was PayPal's consumer happiness rating has increased 11 points very recently and has gotten it right on par with Square, where it was not before. And a lot of that is due to the cryptocurrency ability. And so Square kind of laid the groundwork for this and the pathway. And I think PayPal did a pretty good job of following their lead.
Yeah, Andy, believe me when I tell you, I like this conversation because I am a big fan of the payment space. I'm just worried about this last leg, and I'll illustrate what I mean to you. On October 21st, 2020 is when PayPal announced you can make direct purchases of Bitcoin and other cryptocurrencies, right? October 21st. That day, the next 9 days, it concerned me because the stock sold off from $213 to $179. And that caught my attention and asking right after they announced it, why did it do that? Well, turns out if you do a little more research, the entire market sold off during that period. The S&P 500 sold off hard during that period. Now, from that next 9 days on, from 179, it's rallied from there basically to here, to 250, right off that. So that's why I think this company is outstanding. Everything they're doing is great. I'm just worried about this last big percentage rally in this name and why it is. That's the foundation of this company, based on payment and based on Venmo and I use Venmo. I'm 100 years old and I use Venmo. So I believe in this company in terms of payment. I'm just worried from a trading perspective about that last premium put in because of cryptocurrency, guys.
Yeah, it's a big premium. I mean, if you look and consider PayPal a bank, you consider PayPal a bank, it would be the second biggest bank in the United States, behind JP Morgan, ahead of Bank of America, ahead of Citigroup. So there is a lot of that has to be somewhat speculative in terms of the future for PayPal. Mm-hmm. And I think, Wall Street is ready to bet on the company. They see cryptocurrency as a consumer acquisition channel, probably more than anything. And, so far so good. But I understand what you're saying, because I do think that there is significant risk, and there is competitive risk. Square is also a disruptor in the space and is executing very, very well. And it seems like those two are the only ones battling, but I can tell you that's probably not true for long, as Bank of America, Wells Fargo, Citigroup, JP Morgan, all of these, Morgan Stanley, all of them are trying to get into this peer-to-peer space and are looking at the same opportunities that Square and PayPal are. So, they're definitely benefiting from being first and second movers in this space and doing a really good job of execution. But with that opportunity always comes increased competition.
All right, so Andy, let's put the entrepreneur hat on. I like to lean on your expertise there, and let's focus on the kind of the acquisition component of this. I think that's where it makes a lot of sense to me. And I know we don't dive in a ton to demo groups and trying to figure out, who are they targeting here, as your data doesn't oftentimes go into that. But expanding into cryptocurrency, what we know about cryptocurrency, and full disclosure, I'm not an expert on this space by any stretch. If anything, I would say I'm fairly green. I don't know much about it, but I do know that it skews primarily to younger, more millennial type of traders, those who have an affinity for risk. And we see that this kind of the same kind of trader maybe that goes for the names like GameStop and some of these very, very volatile swings. There's a desire for volatility. There's a desire for risk taking. And there's also kind of an idea of, okay, well, if we get these guys into the platform using cryptocurrency and then they're using us for other things because the money's already there, is the idea with targeting that group because they're younger, they're going to be maybe loyal, longer-term customers going forward if their experience is a good one, as opposed to targeting someone who's maybe a little bit older, has a little bit more wealth right now, but maybe is a little bit less likely to kind of change. Maybe they like to do their transactions in cash. Is that the thought process here, Andy?
Yeah, I do think so. I think that there's pretty good evidence that, the banking, financial providers that someone chooses in their 20s tends to become the financial provider that they use and lean on for the remainder of their life. I don't necessarily know that that's going to be true going forward as much as it has been in the past, but it's definitely, I think, the bet that these companies are making. And look, there's really good reason for someone in their 20s to be highly, more risk tolerant and to extremes at some point, because you have your whole life to make up for any losses that you might have. And so I think that there's pretty good reasons behind this stuff. I will say with PayPal, the cryptocurrency stuff, I checked it out a little bit personally. It's a little bit of a fake platform. It says that you've bought the Bitcoin, but you can't really move that Bitcoin out of the platform. So it's more of a trading mechanism or, kind of a quasi investment mechanism than it is truly owning the currency. We'll see what PayPal does with that, because they're going to have to move to another level if they really are serious about getting people actually transacting in these coins and using them to pay for the dinner, like Jenny mentioned before. So I think, in totality, I think that your point is absolutely right. They're tapping into a risk-taking demographic on a very, very hot trend, and using that for customer acquisition, with the bet that where people start their transacting life, as adults, tends to be where they keep it long term. And we'll see about that with PayPal and Square, but those are definitely the bets that they're making.